At Staples Business Advantage, our experts can help you find furniture that fits any design and budget, while AI can
recommend products based on preferences, generate 3D models for visualization, and optimize space planning for office furniture.
take advantage of our team's eye for style and design.
And my eye for, wait, I have no eyes, only algorithms.
Let Staples Business Advantage use today's latest innovations plus our team's experience to make furnishing an office space easier for you.
Sign up today and save 20%.
Staples Business Advantage.
Business is
Human.
Stocks for beginners.
Yeah, so many times that we just see kind of the squigglies on the screen and you're like, oh, they're doing really good the last, few quarters. But then you go in there and you kind of crack the nut and you start to say, well, I don't know if I really see what's going on. And then there are some companies that their line is kind of flat, but their dividend yield's super high. And you're like, oh, hey, let me look at this company and everything's rock solid. Really smart group of guys. They're, taking more and more market share, but they're not on CNBC every day and they're not on the Reddit boards. For me, it's debt focused, right? Because as soon as rates start to climb back up, we're going to see that kind of hit the door. Companies are going to start, defaulting.
Hi, and welcome back to Stocks for Beginners. I'm Phil Muscatello, and today we're talking about M&A, which stands for mergers and acquisitions. It's something you'll come across as you learn about stocks, especially when they're taken over. My guest today is Hunter Allemand, Managing Partner of Moriah Consulting. Hello, Hunter.
Hey, how's it going, Phil? I really appreciate you having me on today.
I appreciate you coming on. Hunter, you grew up in a tiny town of 600 people. We haven't got the name of that town, by the way. What was the name of that town?
Oh, yeah. So I grew up in Moriah, Texas. When you grow up in a town that small, you hardly ever share the name with anybody because they don't know where it's at.
But now you're in Lubbock, Buddy Holly town? Yeah.
Yeah, Buddy Holly's town.
Yeah. And you've been interested in business since being a toddler. How did that work?
Yeah, so it's kind of funny to hear stories from my parents and my grandparents talk about me as a little kid. I would go to work with my dad. He's an auctioneer, so, cattle sales and things like that. And I'd be hanging out with the old men chewing the fat, talking about cattle prices and, just had a fascination for productive discussion, right? And from there, I got interested in making money and working for those old guys. And so that kind of just blossomed a business relationship, whether it be as an employee or anything. It's that value exchange. A young man's be kind of tough to make it in the cattle business.
Oh, that must have been lovely. Must have been a real pleasant attitude. I mean, they must have loved a kid that was taking interest in what they were doing as well.
Yeah, absolutely. I think that I've kind of always gone against the grain in that way, especially I hear it all the time about people my age. I'm 23 years old and kind of making, some serious waves. But at the same time, I come across this, attitude about people that are my age and, their perspective. And I understand. I think we live in a society of instant gratification, but I think where people get messed up is they want to think it's our generation, but it's people that kind of fall into that, trap of getting too involved in technology. So yeah, I think I've always just kind of been a holistic person, right? And just loved having relationships with people. And that's what's gotten me, where I'm at in business today is making friends and following up with those and just kind of letting those networks kind of grow.
Yeah, that's one of my policies on this podcast. We don't talk about millennials or Gen Zs or boomers or anything. I think they're words that divide us rather than bring us together as people.
Yeah, absolutely. I mean, and that is true. That's exactly what I like to think. There is no kind of age. It's really hard to, quantify somebody's experience just in the terms that they lived on years, right? I've met a lot of old people that didn't know nothing.
So you like stocks, and you've liked stocks from a very early age. How did you actually start trading at 11 years of age?
Yeah. So, I'm like a kid of the recession, right? About the time I was 10 years old is when the housing crisis started. And, being that value exchange guy, I loved watching the news, even as a little 10-year-old. I'd get up in the morning and watch Good Morning America. And then that progressed into, watching financial news. And yeah, I've been an avid fan of Bloomberg since about 2010. It's so exciting, though. You had so much going on. It seemed like the world was going to end from one perspective. You had kind of the gold bug saying this was all it, the Obama election. And it was so interesting, right? Or you could have been focused on YouTubers and video games, which were also, wildly successful. So I think that there's a lot of people in my generation that got picked up into this, hey, this recession's huge and there's a lot to learn from this. And, yeah. That's where I got started. My grandma actually set up a E-Trade account for me, a custodial account, and that's how I started. I think, the best way to learn is like by cutting your teeth, and, just started putting the money I'd make mowing lawns or helping clean out barns or whatever on there. And, it just started to grow, and I started investing. And, obviously that money, I tapped into it whenever I needed to go out on a date or anything like that. So it was a great way to just kind of make some passive income on the side, like as a kid, which is crazy.
So what was the first stock that you bought? Do you remember?
So Netflix, yeah, I do remember. It's Netflix. It was, I think, like $9.
It's usually
$9
Disney's the one that the kids go for first, but you're a bit more advanced than that.
Yeah, so it was totally on the trend. My like average, I think, at that time was like $9 and some change. So really regret losing a lot of that position just over time. But that just shows you how important it is to have those diamond hands, right? And really hold on and let those things just play out, because Netflix at 9 was a great buy.
And you were swapping them for some of the stock for dates as you got into the teen years, did you?
Yeah, exactly. And now I'm looking at it and it's like, wow. But hey, it's whatever, you live and you learn. And I feel like it's massively important to have learned those lessons as a kid, because, getting where it's a little bit more serious and you're talking about putting, portions of your income into a portfolio, it's so important to understand what that time can do for you. I've seen it. I've learned it. And also, I've learned about this, speculation bubble way before there was a bubble, right? There have been people, stock gurus have existed this whole time. They just haven't been so pervasive, right? And so, not only did I have good trades like getting AMD at sub $10 and getting Netflix at $10 a share, I've also had experiences where I've got into penny stocks, tried to get rich quick, and, blown up my account. I've kept the same. What's so crazy is I've kept the same account this whole time. I've only just recently converted it.
What, to Robinhood?
No, I've only recently converted it to just a solely my account. My grandma's been connected.
Your grandma's.
E-Trade was like, hey, you're an adult now. You don't need a custodial account. So I was like, okay, I guess it's time to give it up.
Yeah. So what were some of those mistakes? I mean, you just sort of briefly brushed over them, but let's focus on a couple of those mistakes.
Yeah, absolutely. So, I think the biggest mistake is kind of buying into other people's education, right? In a way that they're selling you a dream as opposed to solutions. And that's where people kind of get messed up in this business. They're thinking that there is some kind of answer to like get them rich faster than just letting your money compound. Where you get rich faster is on the outside. And I think that there's all these guys that have, nice cars, nice boats, beautiful women, and they sell the allure of success. And in reality, oftentimes some of these people just have maxed out Amex cards and they're just selling their coursework. That's where they really make their money. So, it's not even their trading that's good. And I fell for that, bought some, $1,200 master classes to make you good at trading. And it's the same thing you can get on Investopedia. You just have to spend the time. Like I said, cutting your teeth is so important. Right. And that's kind of what it was for me. I kept trying to buy those things occasionally. Timothy Sykes is the most notorious one. There's a few other like signal provider people that I've fallen for. And that's just, pure laziness, right? Trying to just get stock picks fed to me. So
that's really important, though. That's one of the things I keep on going on about this podcast is you can't depend on stock tips. Like, okay, you might get a really good stock tip and you make a great deal of money out of it, but where do you move to next? Or you can just be losing a lot of money as well and, scare you off for the whole process.
Yeah, absolutely. And I think that that's kind of the big thing is it starts a confirmation bias. Not only, you don't want to be dependent and you want to have your own investment thesis, but if you do good, I'm saying that there are good stock pickers. They will make mistakes eventually. And who knows where you're at on the risk to reward scale. Because so many times I've been on a hot streak and started scaling up my positions, and which is already a critical mistake. But, if you're dependent on somebody, like when I was 14 years old, I was really dependent on Timothy Sykes to give me my picks. And I had success, right? And then eventually there was this point where I was so confident in his picks that I was doubling down on my positions. And it will blow up your account so fast, right? It gets that confidence going and you're like, this guy has to be right. He's making millions. Look at his cars, look at his stuff. But really, the millions come from me paying every month.
That's right. He wouldn't have to do what he was doing if he was making millions on the market himself, would he? I mean, that's
absolutely.
Always the subtext on that. So have you moved it more into understanding more about fundamentals and studying the fundamentals of businesses as you've gotten older?
Yeah, absolutely. I think that it kind of came with some tenure in the corporate world, right? You see how businesses operate and you see how massively important it is to them, all the financial metrics and how they run their business on gross margin and things like that, just economic fundamentals. And yeah, it started to make sense to me. It's like, yeah, there are companies that are vastly superior. It doesn't matter, what they look like on the Reddit board or whatever. These companies are good and you want to own them. And that's where you can make money, right? Especially in dividends. I think there's a lot of times people are just like, oh, that's old and played out, and they see growth. And now we're looking at inflation, right? So that's fundamentals are starting to really come back into play. And yeah, just as I've gotten older, I've just started to get more patient, right? And I like to always say that patience is spelt with a Y. Take your time and you'll get paid.
Ryan Reynolds here from Mint Mobile. With the price of just about everything going up during inflation, we thought we'd bring our prices down. So to help us, we brought in a reverse auctioneer, which is apparently a thing.
Mint Mobile Unlimited Premium Wireless. How to get 30, 30, bit to get 30, bit to get 20, 20, 20, bit to get 20, 20, bit to get 15, 15, 15, 15, just $15 a month? Sold!
Give it a try at mintmobile.com/switch.
New activation and upfront payment for 3-month plan required. Taxes and fees extra. Additional restrictions apply. See mintmobile.com for full terms.
So in your bio, you mentioned that you've founded a couple of startups. Can you tell us about those?
Yeah, so I guess the first, I've really been kind of on the support side. So the first one is a kid I grew up with. He had an ag project that was really cool. We were making some custom stereos, and they're CNC metal boxes. Really, really interesting thing. We'd go in and we'd put acrylic plastic that was opaque and LED light strips and basically a 12-volt car audio system. We'd put it in these boxes and put kind of soundproofing in them so people could, move them around, right? So they're portable and they were, really flashy. They're made for stock shows. And for most people that aren't aware what a stock show is, it's like at the county fair when they have those cows. And there's a huge, big old business and there's lots of money in it. And people want to come look at my cattle, buy my babies, and you might have the next big winner. So yeah, we started selling those stereos kind of in that space, and we were really successful. And we eventually got a buyout offer. And at the time, Austin was 17 and I was 19, and it was a good time for us to move on. He was going into his senior year, and it's we sold about 40 of them, and they were about $5,000 a piece. So,
wow, fantastic. Good margin. Was there a good margin?
Well, a couple of kids running a manufacturing business, we weren't running off margin. We were just seeing the money come in, and we were buying supplies. And, fortunately for us, we built those relationships calling the suppliers. One day we were like, hey, let's just stop ordering them for the retail store. And we just started calling the companies, and they're like, yeah, fill out a form and show us kind of what your accounts receivable looks like. And we started sending our bank statements. They're like, oh yeah, we'll give you, net 30 days. And it just started rolling. So it was very interesting, but I think our best stereo that we built had to run a margin of around 18%, which is pretty solid. But for the most part, we were making 5 or 6% on those things, if anything.
And not taking into account all the time that you must really spent soldering.
Yeah, but at the same time, we created a brand, right? And that's eventually gave us the platform to launch, a mass produced version, right? And so we reached out to a Chinese manufacturing company and, made a smaller portable Bluetooth speaker that was plastic and aluminum, right? So very small, maybe about 8 inches long by about 5 inches tall. And so this is a much smaller. And we started a pre-order program, and that just, the brand took off from there. And yeah, we were like, you know what? Maybe these guys that were interested before in kind of our process before we were really serious about the business, they're like, yeah, we'd buy all the equipment off of you and, help us, learn over a couple of weeks. And that's what we did. So then Austin went back to high school, and I was out on my own, and I was like, all right, what's next for me? And that was really fun. I met Mike Ditka at a leadership conference and got to meet some really great people, the president of PayPal at the time. It was awesome, right? I mean, I was a young guy, and it just really got me started. We didn't make a lot of money, and we didn't get super rich off the first one, but what we did give us a bunch of experience and kind of that, hey, this is possible. And so, yeah, that from there, I went into the oil and gas business. It's kind of the family thing. My granddad worked for an oil company for 40 years, and he had a lot of connections that hadn't quite retired yet. And I took a job opportunity out in Midland, Texas, which is, if everyone knows, is kind of the armpit of the world, but also, the place where oil comes from. So, yeah, and it was booming at the time. It was 2017, and things were really starting to look up after, things had really capitulated in 2016. There was some optimism. And so, yeah, I got moving out there, was working as a lease operator. So basically just producing oil out of the ground, keeping wells running. Took kind of a night job where I'd go work on the drilling rigs and run casing because, man, the money was just there and it was this awesome. And did that for a while and, just got experience, started meeting people in the business and, got an offer for a startup company running their operations there in Midland and in Houston. And we started to really take market share in the steel business. There's a lot of steel.
So just back up a sec.
Yeah.
You got an opportunity to join the startup company? Is that the case?
Yeah. So they asked me if I was interested in coming on, and I was like, yeah, absolutely. I wanted to get into materials, and I thought it would be an interesting place. And
what was it doing?
So what we would sell is like pipe valves and fittings. Yeah. So pipeline has a lot of pipe valves. And so just steel products. It's massively, it's the infrastructure, right? So got into that and it's distribution. And so started to learn about the distribution business. And I just think that for me, all these experiences were kind of just nuggets, right? Just picking up a little bit here and there. And it's really culminated to where I'm at now. So that was very successful. Then the oil market busted out and, it's cyclical. So learned, that no matter how good everything was going a cycle ago, it doesn't matter in the now, right? And that's why it matters about fundamentals in your stocks that you invest in, because you don't want just one down period to take the company you're invested in out, right? And these highly leveraged businesses, that can happen, right? And so that's why we want to invest in quality companies, and that's why it's so important. And I think people have kind of deviated from looking at the fundamentals, and they're just seeing the hype, and it worries me because I look at some of these companies and if things do go bad, they won't be able to, they can't burn cash that long to weather the storm. So that's what's so important. And just those kind of things just kind of started picking up. And,
when you say, just wanted to back up here and find out about highly leveraged, what do you mean by highly leveraged companies?
Yeah. So there are a lot of ways that companies can take out leverage, right? So through senior debt, through equity financing, diluting their share structure.
It's basically debt, isn't it?
Yeah. I think what
it's like like an individual having too much on their credit card, and then getting into trouble when the cash flow stops or you lose your job.
Exactly. I think a lot of people, I see these share offerings all the time, and what people don't realize is, hey, they're actually diluting, your ownership. You're owning substantially more while they're taking in money from the equity holders. So those are the things that you have to watch out for, right? When people start to hit the doors, right? As how levered these companies are. And there are a multitude of ways for companies to secure debt. But the most important thing is just to realize, kind of what their balance sheet looks like. And it's right there, right? If you look at your 10K, you can see what you need to see.
And that's the thing about investing in a good company, is that everyone who works in that company is working on your behalf as a shareholder. That's so much more than just a ticker code, isn't it?
Yeah, I think, so many times that we just see kind of the squigglies on the screen and you're like, oh, they're doing really good the last, few quarters. But then you go in there and you kind of crack the nut and you start to say, well, I don't know if I really see what's going on. And then there are some companies that their line is kind of flat, but their dividend yield's super high. And you're like, oh, hey, let me look at this company, and everything's rock solid. Really smart group of guys. They're, taking more and more market share, but they're not on CNBC every day, and they're not on the Reddit boards. And you got to find those gems, and they're getting increasingly harder to find these days, right? The trades are getting more and more crowded. More and more investors are bringing up valuations, and that's not necessarily a bad thing. It's just kind of changing, the metrics and the sort of the guardrails, right? Like what makes a good company in these low interest rate environments, For me, it's debt focused, right? Because as soon as rates start to climb back up, we're going to see that kind of hit the door. Companies are going to start, So
is that part of your screening process now? Is how much leverage, how much debt a company has?
Yeah. So I think that right now, as we go into kind of this inflationary period, one would say, hey, well, they've got this debt at this for a certain price, and it's locked in there. And I'm saying, well, it's more of the kind of the story of the interest rates, right? How can they service new debt? Because some of these companies, their growth plan is solely based off of getting money from the outside. It has nothing to do with saving what they make. It's about getting more money from the outside. So yeah, for me, that's what I look at these days is really, how much debt does this company have? Are they a zombie? If we do go into hyperinflation and, consumers start spending less, right, as they had to, flock towards staples and they're not buying, AirPods anymore, right? That's going to change the game. I love Apple, though. I mean, they sit on a lot of cash. They're definitely not the same. The bonds that they write out, they're gold, right? So
that's right. Yeah.
These are more companies that you kind of would find on the Russell 2000 or on the, the lower side of the NASDAQ, right? Blue chip stocks, the money talks and, BS kind of walks in the game, right? So I say that about Tesla too. And, everybody says, well, they, make most of their money off tax credits. Well, at the end of the day, every time I've gone short on Tesla, I've lost. So I'm done. I'm done trying to guess that thing and just follow the money, right?
So tell us about moving into mergers and acquisitions. Okay, so you're with this gas and pipeline company, and now a couple of years later, you've got a consulting business for mergers and acquisitions. Tell us about that move and what mergers and acquisitions actually are.
Yeah, I think that that's a really scary term. You think merger, and it just sounds like putting two companies together, and acquisition, buying a company out, right? But there's so many more nuances than that, right? I think that these transactions can be completely, all over the board between joint ventures, partnerships, complete buyouts, spinoffs. There's so much jargon. It's a very jargon-based business. But to kind of discuss, getting started, me and some guys in Midland, we knew that we wanted to start our own business and that was kind of the way to really get to financial independence. If you really look at it, working for somebody, no matter what position you have, if you're number two or number one, that's the only way to do it is if you are the owner, the principal director. So yeah, we wanted to start a consultancy business where we could kind of just do some side work. Right. And, we were going for about 8 months. And this last kind of oil bust that happened with COVID, my business partner, he got laid off. And I'd been going at Moriah full time, working with some of our startup clients and just kind of doing some ad hoc stuff. And when he got laid off, he went to, go talk to his vendors. He was an engineer. So he, when he was working on projects, he'd have vendors and, built relationships over the last 6 years with these people. And so he's going to say his goodbyes, and say, hey, look, my tenure there is over. And, he approached this older couple that he'd worked with the entire time he was there. And they're like, hey, so what are you going to do? We want to retire. Would you want to take over our business? And he's like, well, no, me and some of my friends, we have a consulting practice and we're kind of getting in, the deal business. And they're like, well, do you think you could sell our company? And, being the ambitious guy and kind of knowing this, that there is, there is something there, right? We said, yeah. So, we put a discounted cash flow analysis together and started doing seller's discretionary type models. So a lot of financial modeling goes into this, taking the P&L and basically, getting some averages and taking some metrics and just trending everything and doing add backs, right? Sometimes, these business owners, small business owners, they just pay themselves a lot and they buy themselves vehicles and things like that. And if somebody's going to take them over, that doesn't matter, right? So we knew all of that going into this, how to look at the financials and kind of work around them. And so, yeah, we took the deal on the road, and taking the deal on the road is how you meet people. We started, just reaching out to private equity groups that, owned oil field service companies. And they were like, no, but actually I know a guy and this is how you should do this if you want to, have a little bit more success. And we've just kind of, I like to say it's a God thing. The door kind of just opened up for us. And now we're in this space. And it's just one thing that I like to say, it's part of my 11 rules of life. Every morning I wake up, I have these 11 rules. One of them is own ignorance, right? I'm not a seasoned practitioner in M&A or investment banking. I accept that. And there are a lot of people that are willing to help younger people like myself or even your listeners that are interested in starting any kind of business. There are so many, experienced people that are willing to help. Do you have the ambition to do it? People will help you. And so, yeah, took this deal and they were like, hey, you guys are awesome. It's so crazy that you came up kind of from the dirt. When you think about M&A and investment banking, it's the ivory tower. So people from the oil fields, it's, we're we're nobodies to them.
Yeah, you didn't go to one of the business schools or anything, did you?
No. Yeah, I actually dropped out of school. So it's really crazy, to work with people that went to Stanford and Wharton and, and it's what we found is like there is a commonality in just the fundamentals, right? And that's what brings us together as investors. There are rules that we can abide by that work and they're time tested. And that's how we do it. And, we share that etiquette now. I'm starting to pick it up a lot more, short experience and passing it on to my consultants. But yeah, it's just kind of, I hate to say a good old boys system because that implies, you can't get in. But there's just some rules that you follow. And that's what we're doing for people is, giving them an opportunity to get into M&A and try it out. But yeah, we've just had an open mind and we listen to what people are doing and where they're at in their business cycle. And some people need money. Other people want to sell their business. And we just try to create relationships and learn as we go. And, I don't think we're putting ourselves in a position to make mistakes. We're actually, creating the most value because we're seeking the best people to help us with these challenges. So it's really awesome, actually, is by not knowing, we're actually doing a lot more than if we might have known, I think, right? If we'd have been some associates or analysts from investment banks, I think we'd had kind of our mindset set in one direction, whereas we're taking a culmination of operating professionals plus investment banking professionals and kind of getting the best of both worlds.
You owned your own ignorance.
Yeah, exactly. And it's working every day. And, I think that's like one of the things when we talked about getting on the show together, it's like, shares for beginners, I love stocks and it's how I got into business. I think if I would have not been interested in the stock market and the recession wouldn't have been going on, I think I would have been, a science type person and went more into like botany or something like that. I love my garden and, know, but I think that if it wouldn't have been for business, I wouldn't have eventually got here. And now I'm starting to kind of, stocks are great and it is a component to your financial success. And now I was like, hey, I can talk about, freeing up, your investment criteria beyond just a few ticker symbols and realizing that you can invest in your whole life. There are way more outlets than just the market to have investments in, and they're not just for rich people.
How did that initial deal end up? What was the outcome?
Well, they decided that they didn't want to retire. They saw that there was a lot of money and people were interested in their business. And they're like, hey, maybe we wait a couple of years. Oil prices are going up. This was last year. And oil prices were on the rebound. So they were like, oh, well, I think we'll stay in. And we were like, yeah, hey, that's a lot of value for them. I think we brought them a real quantitative answer to their question was like, how much money can we get for our business? Can we retire? We found the value. We got some comparable transactions. And they said, there's a little bit more left on the table. Maybe we'll wait a little bit longer. And that's doing our clients a solid. So that's another thing about these deals, right, is a lot of times you'll see that there are mergers and acquisition discussions going on, and there's a little buzz on the news. And you're like, that's interesting. And the deals ultimately don't come together either for regulatory reasons, which that's a whole nother gamut. But sometimes they just fizzle out because they realize that, hey, there's more opportunity if we just continue to grow our product, internally, that we could get more money down the road. Or, as crazy as it sounds, business people do have feelings too, and they might not, like the people that want to buy them out or partner with them. And, we've come across that a lot is, things might be going really good in terms of financial negotiations, but then it comes down to like, hey, well, we're thinking about laying off a bunch of the people that work here and outsourcing. And then it's like, as a business owner, they're like, hey, we built this.
These are our family.
Yeah, exactly. Yeah. So that's why sometimes you see on the news these big mega deals fall apart is because, hey, look, things just don't line up and, they go really far and the public gets excited. And what we realize is it's nuanced, right? It's not just about the money a lot of times. And, we got to think about the shareholders, right? And that's their perspective.
So you mentioned private equity. What is private equity and what's their role with mergers and acquisitions?
Yeah. So, the best way to think about it are not public companies, right? So you drive down the street every day and most of the businesses you see are small private enterprises. They're owned by...
They're not listed on stock exchanges.
Yeah, exactly. And you wonder, why can't I, invest in John Q Barbecue, right? Well, you can, but it's a little different, right? And, it just comes through private equity. And that's simply what it is. In the case that what you're asking me is most of the time it's a group of, very wealthy people or, well-financed people that can, get access to capital, and they make, large majority investments in private businesses. And essentially their goal is to either turn them around or add them to an existing company that they already own. So essentially these people are just investing in businesses that aren't on the public markets. And it sounds like such a scary club term, but private equity is just ownership in companies that aren't traded on the public stock market.
Yeah, that's a very nice definition. So really, mergers and acquisitions, the way that you're speaking about it, it sounds like it's really putting a spotlight on the fundamentals of a company. And as you say, it might even inspire the owners to go, hang on, this is a pretty good business. Why would I even want to sell it?
Yeah, exactly. I think that's the part, right, is, as consultants, when we get into these projects, we're like, okay, we get the P&L and we get the balance sheet. And then there's like a whole slew of questions that are, qualitative, and they start to even crack even deeper into the fundamentals, like employee retention programs, process and procedure, things that you wouldn't normally get from, your investment prospectus unless you were spending every quarterly report and actually going through and following these projects, right? You miss that a lot of times. And when you're buying businesses or you're selling businesses, you're looking at these features to really complement and really bring out all the value you can. So that's really all it is you're getting everything that isn't subjective and this business is great, that's so good, we make money. No, it's more like, hey, this is exactly, kind of our run rate. This is our EBITDA. This is our gross margin, inventory days on hand, things like that. And that's it. And that everyone makes their decision based off of, quantitative metrics. I mean, we kind of like to add a qualitative twist because you and I both know that humans, it's not just numbers and digits, right? There are great leaders and there are great people, not only in the board level, but, on the ground floor too. And so we want that to kind of come to the forefront as well.
So Hunter, how can people get in touch with you or find out more about you?
Yeah, so you can find me at moriah-consulting.com or find me on LinkedIn at Hunter Allemand. That's Allemand. And I'm always open to discuss, business opportunities. If it's a startup, you're interested in selling your business, raising capital, or simply just, learning a little bit more about the space or even working in M&A. Moriah is constantly, devoted to hiring, talent, not just from investment banking, but from a multitude of industries. I think that those perspectives and really help, our transactions move along and create real value for our clients. So yeah, you can reach out to me on social media or on our website.
Fantastic, Hunter. Thank you very much for your time today.
Yeah, Phil, this was a great one.
Stocks for Beginners is for information and educational purposes only. It isn't financial advice, and you shouldn't buy or sell any investments based on what you've heard here. Any opinion or commentary is the view of the speaker only, not Stocks for Beginners. This podcast doesn't replace professional advice regarding your personal financial needs, circumstances, or current situation. Thanks to Christopher Soulas for music production out of Garlic Breath Studio. Remember, music flows when the money don't.
With Staples Business Advantage, you get the benefit of thousands of experts.
Plus optimizations powered by the latest technological innovations.
1 + 1 =
2.
3.
Whatever. Sign up today and save 20%.
Staples Business Advantage.
Business is
human.